Alright, this is going to be a video about exhaustion gaps. And today was a beautiful example of that. Um, sometimes I think of us as traders as being the translators of the market. And sometimes the market speaks in a language we're not familiar in, kind of confusing. And sometimes it speaks in English and it just screams, tells you what to do. So I'm going to go over today why the market pretty much told us exactly what to do. So let's look here at the hourly. I'll point this out. This area on the hourly here, from the high to the high of this bar, is the daily supply. This is our daily supply zone. Price fell from here and could never get above this point. So by the fact of the market, there are sellers in this area. I'm not going to try to pinpoint exactly where, but we know that for a fact. Um, so let's drag that over. Yeah, it's about get it right down here because I think it pretty much came in right, almost right a couple ticks into the area today. Okay, that's on the hourly. That's what we're looking at. That is our daily, right in this area, our daily supply. Now, thing to note about this daily supply, this is the origin of our down move. We know the origin is the strongest point, is the strongest supply or demand level, is the origin of the move. Why is that? Because that's the point. Whoever bought or sold at that point was big enough to stop the market in its tracks and completely reverse price. So coming into the day with that in mind, we look at the 5 minute. I marked it out here. This is our gap on the open. We have a 17-point gap up. We have a gap up less than 20 points. Our expectation is a gap close. But what's unique about today is we gap up into one of the strongest level that we can after a huge extended rally. I mean, we're talking about, we all know how crazy this rally was. This was a super extended rally, an extended rally exhaustion gap into supply at the top of our range. So now we look at the 5 minute coming into the day. We open up, push higher, and pause. Create a higher high and reject. At this candle here, we are looking for a short. Not only do we reject, but we come down here. So now we go up here, come all the way down, and then retrace before moving lower. So right in here is our kind of confirmation. We made a higher high, grabbed new sell orders, and rejected. So at this point, our expectation, oh, hang on, well, our expectation is a gap closed. Let's pause there real quick to mark out our demand levels we're looking at on the hourly, because we have to have targets, right? First thing that sticks out is this right here. Price came down overnight, stopped completely in its tracks, and moved higher. Not only moved higher from this point, but it made a new high. So we are going to qualify this demand zone as being something to look at. Now, you might look here and be like, okay, well, this is demand, this is demand, this is demand, and this is demand. Okay, so now we investigate these demand levels. What we have to note about these two demand levels here, well, first off, this first level When we formed this level, we couldn't even make a new high. This level here just created a range, or we just stayed within this range, and we retested it twice. Okay, this level I am not interested in. This level here, what happened when we formed this level? Well, we just couldn't move higher and we stayed in this range. And we came back and tested the level multiple times. This level is nothing. Also, throughout this whole area, it's just Price spent a lot of time here. When Price spends a lot of time in an area, you expect to not necessarily pause at any level there. These are non-quantifiable levels, not worth looking at. Next level's here. This is a beautiful level. We move up, pause, and from this pause, we just blast off. So this level is definitely something we're looking at. And then this level is the start of this swing. So we'll keep that level in mind also. So essentially, these are our targets if we start to break down. So back to the 5 minute. At this point, we are shorting. We have an exhaustion gap. We're in large supply. We made a higher high and rejected. So now we're looking for shorts. Where are we expecting to go? We expect to fill the gap at 56.40. And the first demand level is at 56.35. So 56.40 to 56.35 is this area. So from this point, we expect to go here. When we pause here and start breaking through, where do we expect to go next? This demand. This demand is at 56.06 on the 5 minute. That's right here. I'm just going to talk about those two today because the point of this video is just to show the power of an exhaustion gap. And our expectation was met here. And it continued, it bounced and continued lower after that. But the point is, once this occurred, or even down here, you should have only been shorting the market, and I shorted heavily. I actually shorted every single pullback today. Because it was so clear. Literally every pullback. This one, this one, this one, and this one. It was such a clear day. Every sign of the market pointed to a move lower. Do we continue lower after this? Who knows? But man, what a day. I hope you learned something about exhaustion gaps, what to look for, and yeah, let me know if you have any questions.